Hi, I'm Jim Pierce with Baton Investing. Every day, people like you come to us when they realize their current investment approach just isn't working. We give them an easy-to-use system that has beaten the S&P 500 by over 300% since 2003, takes just 30 seconds a month to use, and most importantly will help you achieve your financial dreams. Now, the last time I spoke with you, I recommended a stock called AU Optronics that earned a perfect score of 100% from our investment strategy based on the methodology of Joseph Piotroski. Well, the good news is today we found another company that also earns a perfect score from Piotroski called Superior Energy Services. Now, I know what you're thinking. Oil prices have plummeted and energy stocks have gotten killed. But that's precisely why some of those companies are now a great buy. But the key is to be able to identify which one of those are really bargains based on their intrinsic value, and that's what Piotroski's model does. So here's how it works. Again, the name of the company is Superior Energy Services, symbol is SPN, and again we're talking about the Joseph Piotroski's book market investor methodology. Now the first thing Piotroski looked at what is called the book to market ratio. In other words, book value is an accounting term, but he wanted to see if the book value of the company is greater than what the stock market is currently valuing that company at based on its market capitalization. In this case, the book market for Superior Energy Services is about 11% higher than its market capitalization, which creates a ratio of 1.11. So that's the first test. Once a company passes that test, Piotroski wants to make sure that this is a healthy company and not one that has a high book to market ratio because there's something going wrong with the company. So first thing he looked at is return on assets. He wants to make sure that this company still has a positive return on assets. In the case of SPN, it has an ROA of 3.64, so it passes that test. The next thing Piotroski wanted to see is that cash flow from operations are growing. So he looks at the cash flow from the most recent year versus the previous year. And in this case, they have positive cash flow of 1.033 million, which was more than the prior year. The next thing he wants to look at is a current ratio, which is the current assets minus the current liabilities for the next 12 months. In other words, is this a company that is going to be able to pay its bills, and is it moving in the right direction in terms of managing its short-term debt? So in the most recent year, SPN had a current ratio of 2.43, which is greater than the previous year of 2.31, which means its current assets are growing faster than its current liabilities. So here's a company trading at what appears to be about an 11% discount to its book value, positive return on assets, very positive cash flow, and it's improving its current ratio. Now, today it was trading, when I looked a few minutes ago, at $24.75, a little under 25 bucks. We don't think you should chase this stock, but you can buy it up to 26, and it does pay a decent dividend, right now of about 1.3%. So again, the name of the company is Superior Energy Services, symbol SPN. Now, SPN is just one of 10 stocks that we currently hold in the Baton portfolio. Every month we identify the 10 highest scoring stocks out of the more than 6,000 that we evaluate and rebalance our portfolio accordingly. If you want to know more about how our system works, just visit Baton Investing and click on How It Works. There's also a simple 3-question assessment you can take to determine if Baton is right for you. We can only help about half the people that take the assessment, but maybe you're one of them. So go to batoninvesting.com now, and I'll see you again soon with another free stock pick. Thank you.